Alright, so we are going to talk about the use of the financial calculator. And I know that you guys are trying to figure out, how did Omar come up with the numbers that I came up with? Because what we were able to do in the last video tutorial was to determine a fair market price for that particular stock based on its future value and based on the desired rate of return that we wanted, which was 10%. So I can tell you one thing: I did not come up with these numbers out of my head. You know, I give myself average intelligence, but I'm not a mathematical genius by any means. So I do use a calculator. I use a financial calculator. That's how I came up with the figures. And the financial calculator is the lifeblood of all investment professionals. And you can use a financial calculator to find out several things. You can find out the annual rate of return based on the future value and present value in periods. You can find out what the present value is based on the future value, interest, and periods. You can find out the future value based on the present value, interest, and periods. And it almost seems like it's algebra coming back to haunt you. So if you weren't very good in algebra, here it is again, because you're finding out unknowns from the knowns. And so there are several financial calculators out there, and the one that I've been using since my college days is the BA2, which is by Texas Instruments. And this calculator will come in very handy when making calculations while researching a company and trying to determine the market price that you are willing to pay based on certain terms or conditions. So the variables that we use to come up with the numbers that we got in the last video tutorial, the variables that I used was N, the number of years or periods. I used the I/Y, which stands for interest per year. I used the present value, and I used the future value, which is FV, present value is PV. And I also use the compute button. And all of the variables are in this box right here: the N, the I/Y, PV, future value. And the compute button is at the very top. And keep in mind that you have to press the compute button before you get any type of number. And the directions on how to use the BA2 calculator are of course in the package, the specifics, because it is a special way that you would have to use the calculator. And in the last video tutorial, what we did was we calculated how much we should pay for a stock based on my desired rate of return and the future value after 5 years. And so we predicted that the future value of the stock was $41 and that we wanted to earn at least 10% annually. And so from this example, we know that $41 is the future value. We know that 10% is equal to the annual rate of return, or the interest per year. And we know that 5 years is the number of years that it will take to get us to $41. The only thing that we do not know is what is the present value. What is the price right now for the chance to get $41 in the future based on our desired rate of return? Basically, what are we willing to pay for this stock based on our desired rate of return? So what we did was, in the calculator we typed 5, then we press N. We type 10, and then we press I/Y. And then we typed 41, then we press the future value. And finally, after we put in all of our unknowns, we press the compute, and then we press the PV button, which will give us our present value. And we got negative 25.46, which equates to $25.46. And notice that the present value will always be represented by a negative number or a minus sign in front of the value. Guys, so what I did was I went to a website that calculates the present value. And the reason why I did this is because I don't want you guys to think that I'm just pulling figures out of my... And so what we did was we projected the future amount, which was $41. We said that the stock would be $41, and we said that it would reach $41 after 5 years. And we also decided that the minimum amount that we would accept for any investment that we take part in was 10%. And it would be 10% annually. We wanted to get an investment that's going to be paying us 10% on an annual basis. And so we calculated the amount that we would pay to get us to $41 in 5 years. And that amount came out to be $25.46. The exact same amount that I came up with by using the financial calculator that I use. Once again, we projected that the stock price would be $41. We projected that it would make it to $41 in 5 years. And we wanted an interest rate of 10% annually. So the amount that we should pay for that particular stock right now, based on the type of interest rate that we want, would be $25.46. And down here they even give you like the annual dollar amount or the annual interest that you would get over the 5 year period, and it also totals it up over the 5 year period.